Kerry Wendel. Kerry is going to lead a discussion on the real estate market here on the island. So, did I lose Kerry? I hope not, because I can't do it. Okay, here she goes. Excellent. Kerry Wendel, ladies and gentlemen.
On the island. I'm Kerry Wendel. I'm the membership chair of SHPOA, and I'm also a real estate sales associate at Kerr Sotheby's here in Stone Harbor. We're going to talk a little about real estate today, and we brought two professionals, Leiser from Long & Foster, and Wendel. We've been in business since 1995. So he's a wealth of knowledge. And also Ryan Vince is my colleague at Kerr Sotheby's, and is the broker of record for Kerr Sotheby's here in Stone Harbor. We have some topics. I'm going to build a cheat sheet here to talk about. I think one of the first ones that I'm interested in always is the state of the market right now. It seems like the inventory is low, would you say? And what do you see happening in the past that's affecting now and going forward?
Kerry, thanks for having me. I appreciate the invitation. Thank you to Tony and Ryan. Good to be with you. And good morning and hello to everybody here. Thank you. So the state of the market, as everybody I think knows, I heard it described this morning as a boisterous market, and that's certainly true. We've gone through a very unique period in our history, and of course it's affected the real estate market. In March of 2020, we were still rolling along pretty well as COVID news began to spread across the nation, and the lockdowns began to occur. And the market went from very strong, very busy, to very, very quiet. Almost nothing happened in March and April of 2020. And that was a very scary time for everybody for a lot of reasons. And of course, one of the things on our mind, and always on my mind, was what's going to happen with the economy. Is the economy going to simply shut down? Are we headed for a major recession or even depression? And frankly wondered if I'd ever see another home sold on 7 Mile Island. After about a month and a half of that very scary period, in May, things began to come back to life. And there were properties beginning to sell again. And by June, it was almost as if we were back to normal. And then in July, things just took off. And it's been a crazy ride ever since. That's sort of a synopsis of the roller coaster ride that we went through over the last 12 to 14 months. But we'll let Ryan jump in here at this point.
Yeah, so just add, thank you for having us. Appreciate it. And yeah, just add what Randy had said. So we track inventory, we track activity on the island. And prior to the pandemic, I think I saw the highest under contracts in a month on the island be 41. During the pandemic, we hit over 70 5 times, over 80 3 times. So it did accelerate, and Randy had mentioned prior in a meeting that we had. It basically accelerated the buyer's appetite and decelerated everyone looking to sell, because the idea that the prices were going up was great to know, but the reality is that the pandemic put people in a state of mind where they had to have somewhere to live. They weren't going to stay back home. This felt like an area where they could be out and about and be here. So with that, there were less sellers coming on the market. So I think at the end of last year, we put approximately 95 total units under agreement and sold. We are 25 today, 18 under contract today. Total inventory on the island right now, all units, 75 units. 25, just 25 is sold. So it's very limited. The problem becomes today is that all these sellers aren't leaving, or most of them. So most of these sellers are trying to move up becomes a problem because you gotta find the product to move up in. So that's sort of made the market a little more stagnant, I would say, and certainly much more slower, certainly over the last 2 or 3 months for sure. So inventory at the bottom end was, I believe, February, 61 total units on the market. Like I said, now we're 75. So it's the first time in 2 or 3 months in a row where we've increased inventory. I would argue total, around 200, which was a year and a half ago, was a really good market for both buyer and seller. Appreciated market, really wins on both sides. So we have a ways to go in this real estate market to be worried. So I see inventory building. I do see inventory building, especially in September, because I feel like more of the pandemic is sort of chance. So I think there will be catalyst to these prices. So I think we'll be over 100 in 2 or 4 months. But I do not see, and I'll let Randy talk to this, but in my short-term forecast in the next couple of years, I do not see life sort of falling over a cliff. So I can definitely see a leveling off, certainly first, and then we'll see what happens.
So, one of the things Ryan mentioned, the acceleration effect that COVID had, and it was very interesting as we came out of that slump in April and May, it became very clear that buyers, potential buyers that had always dreamed about having a place at the shore, if not today, then someday, well, suddenly COVID was the catalyst that got them to jump off the fence and jump into the market. So they started buying. At the same time, people who were property owners here already and potential sellers and maybe would have sold under normal circumstances, many of them were feeling the very same things that the buyers were feeling. They couldn't fly anywhere, they couldn't go to Europe, they couldn't take a cruise. So suddenly, keeping the vacation home in Stone Harbor, Avalon is very important. So at the same time our demand was being accelerated by COVID, our supply of listings was being curtailed by COVID. And that, of course, is the classic supply and demand equation. Prices started going up and we got ourselves into the frenzied market that we've seen over the last year. I think Ryan's right on the money now in terms of the outlook for listings as we're coming out of COVID. During the COVID period, some sellers said, take my house off the market. I don't want anybody in my house. I'm not going to sell it because I don't want to let anybody look at it. They're worried about COVID. As we come out of that now, and the restrictions have been lifted, the vaccinations are available, people are putting their homes back on the market, things are getting back sort of to a more normal situation. So I think Ryan's right. We're likely to see some increased inventory over the next few months, and that's a good thing. Mortgage rates, of course, have been low throughout this period, and that's a good thing. It's helped to drive the demand. They've increased a little bit recently, but when you look at a historical rate chart, even though the rates have spiked up just a little bit recently, you look way back in the 80s and the 90s, rates were way, way higher than they are now. So rates are still a factor on our side.
Let's see, one other question. Talk a little bit about some of the prices that you've seen in this past year. Randy, where we started, where we ended up, maybe like a median sales price technically.
Yeah, so in looking back at Bay County MLS data, it's a real eye-opener. And in fact, I just reviewed it yesterday in preparation for today. And in 2011, 10 years ago, our median sale price was $850,000. And that includes Stone Harbor and Stone Harbor Manor, Avalon and Avalon Manor, those 4 municipalities are what I typically call a local market. So it went from $850,000 in 2011 to $1.7 million in 2020. So it's doubled in 10 years. The other interesting thing is in looking at the total value of all properties sold. In 2020, we exceeded $1 billion in sales for those 4 localities. It's an absolutely stunning number, $1 billion in sales in 4 towns. Absolutely amazing. This year, thus far, in the 4 towns, the median sale price has actually dropped just a little bit to $1,650,000. I don't consider that to be an actual drop. I think it's just a statistical thing. And 1 or 2 sales on the upper end or the low end can skew the average and the median. So we're essentially where we were last year.
Yeah, as far as just adding to Randy, I focus a little bit more on just that. And even if you take the manors out, the numbers become even more staggering. So at the end of 2020, the average selling price was $2,704 on the entire house. So we're getting to a point where, affordability becomes a question. Of the 25 current properties on the market, there are 0 properties under the lowest price property today is $1,199,000. There are, of the 25, there are 14 of those properties over 3. So the problem becomes is the lower end really has been tightened up quite a bit, whereas suddenly our inventory is now over 3, which poses the question. Randy had alluded to the idea of interest rates. So I know there's a lot of money out there, but interest rates can only get you so far as affordability. So I think at this point there's been so much development done over the last 3 or 4 years that has pushed certainly the numbers up quite a bit higher. Very few people on the island today view things as heritage. Kind of weird to say because years ago, there were a lot of things that people would construe as a tear down and land value. Today, if anything's priced at or around $2 million or under, there's a lot of people that otherwise would think differently about it today because they have the ability to be in. So there are more people buying properties like that trying to get into the market versus doing away with it. So we're seeing a lot of that on the market. Very, very few. There's not a lot of condos, townhomes available in this town anywhere, but that becomes the extreme limited part of our market. So if you're a first-time home buyer in this town, you have become someone that needs $2+ million almost to buy on this island, which that becomes your question for a lot of people.
So you see from the buying, some are moving up, right? Some people are moving up from where they are. Where do you see the people that are buying now? You talk about people moving up, getting a bigger house, but what about people coming into this market? You hear everybody's coming from New York or wherever. Do you see that at all? Do you see new people coming on the island?
So, yes, there definitely are some New Yorkers coming down there. You can't hear me? Yeah. I have no problem talking about it if you know me. So yes, there are definitely people from New York coming down here. I think to a degree, a little bit of the secret is out that people up north do know how nice this area is and this town is. So there is definitely people from outside of the normal Philly suburbs, Delaware, just normal spots that come here. But I think the biggest thing about buying and selling is when we saw what accelerated the market in 3, 4, 5 is the move up. So over the last 5 years, most of these sellers in our market were not moving up. Most of them were moving out. I would argue over the last 2 years, especially since COVID, most people are not moving out. Most people are trying to move up. So we're doubling transactions every time we do a transaction. So that's put some strain on inventory.
Yeah, no doubt about it. In terms of where people are coming from, statistically, we usually see about 40% of our clientele coming from suburban Philadelphia, and another 40% from suburban New Jersey, suburban Philadelphia on the New Jersey side, and then the rest from areas such as Wilmington, Baltimore, New York City, and their surrounding areas. And I think Brian touched on one thing. When folks from New York and North Jersey come to southern New Jersey beaches, as expensive as they are, they look like a relative bargain compared to the Hamptons in New York and some of the prices they have up there. So the secret is out a little bit in terms of the New York crowd. Affordability, I think, is a potential concern going forward with the prices having done what they've done. And again, interest rates are going to be a factor in that. Roughly a third of our transactions here on the island are cash, so you might think that interest rates don't matter in that scenario, and that you could argue that that's true, but about another third are cash transactions where there's no mortgage contingency in the contract, yet the property winds up being financed anyway. And then the final third are the traditional mortgage transactions where mortgage rates do matter very much. That typically occurs more in the lower and middle range of the market. And the reason that affects the entire market, though, is we need those buyers to be able to afford the low and middle properties so that the low and middle property owners can then turn around and sell and move up. Where we are now with mortgage rates being so low, an increase of about 1 percentage point in mortgage rate translates to about 10% in less affordability. So rates do matter. And, if rates move a quarter point, half a point, not a big deal. If they move 2 or 3 points, suddenly that becomes a big deal. So that's something we've got to keep our eye on moving forward.
So talk to us a little bit about all the building that we see going on here in Stone Harbor. COVID, I know, has affected the pricing of lumber and other supplies. Do you see more building now than ever, or do you think it will slow down? What's your crystal ball telling you?
Fortunately, I just got my crystal ball back from the shop, so it's in good shape. I think there is more building than ever. I don't know offhand the statistics on the building permits and so on up to the moment, but I know recently they've been sky high. Builders are busier than ever, and they're suffering through a lot of the supply chain issues that are affecting other industries. The price of lumber has, from what I hear, it's tripled or quadrupled in the last year. So that's going to be a factor affecting the cost of constructing new. One of the other things that I've observed, Brian, maybe you can talk to this. In the past, we saw so much in terms of spec building. But lately it seems to be that so much of the new construction is for the end user. They've purchased their lot or their tear down, and they've contracted with the builder, and they're finally building the house of their dreams. So in my opinion, it seems like that's moving more in that direction. There's still spec building going on, but a lot of end users constructing now.
Yeah, I agree. I think there's a lot of people in town that have owned for a while, and using the equity in their home, just even over the last couple of years, it makes it a lot easier to build or finance a construction to perm loan to have a new product. There definitely are, like Randy said, there are still investors in town. The problem becomes on that end, and why that has slowed down, is just the purchase on the end. The numbers have gone up, so there's a lot more risk, because the risk on the out, the numbers have to be a lot bigger. So the spreads aren't as wide, they're becoming a little tighter. There's certainly some guys out there that are spending as much money as they can on these speculation homes. So some of the numbers have been large on the back end. But again, your in price, call it under $2 million on speculating, that has moved up just block over block, whereas call it in the 200 block, that was $1 million for a 50 by 110 lot not that long ago. And today, you're talking about $1.6 million to $1.8 million just for the ground. So on a builder's side, that pushes them up, not only just from a price perspective, but like Randy said, it's tough getting material, not only paying for it. Certainly the cost has gone up exponentially, but the supply chain is a big problem. Try to get furniture today. That is, in some cases, 8-10 months out. So some of these people, which I have not yet seen across the board, but some of these builders are going to probably start having to furnish these places because the ability to try and sell something in the summer or in the spring on the idea that, okay, we're going to be ready to go and you can use it, well, that's going away because, yes, the product, the home will be finished, CO ready, you can purchase it, but you may not be able to use it because you may not be able to get furniture for it. So I know personally, we have a couple of deals that are closing in July, and they were working on furniture 3 months ago, and just got updated that they will not have 3 of the bedrooms in until September. So it's affecting everything. But as far as investors and builders, there are certainly still the mainstay builders that are speculating on the island. There are becoming a little more on the investor side, making these investments, having builders build for them. But like Randy said, I think predominantly, just because of the equity in homes, there are many more owners deciding to build for themselves.
What do you see, if you have any ideas of what could threaten the values of the homes? I'm sure mortgages is one thing, but anything else that you can think of?
Well, I think there's always a risk of external threats, and if we do enter into a recession or, God forbid, a depression, obviously that's going to affect everybody, including our market. Other external threats, you always worry about global conflict, war, terrorism, things like that. Those worries are nothing new. We've had, the Gulf War and the recession in 1991, and it was a horrendous time for those in the industry and property owners at that point in time who recovered from that. We had 9/11, in our past, and that was obviously a traumatic time, a scary time, and a tough time for the real estate market. But we've since recovered and then some. The financial crisis in 08-09 significantly slowed our market. Some of the slowest months in recent memory occurred during that 08-09 period, but we've since recovered and then some. So I think there's always threats. Mortgage rates are one that I've mentioned a couple times. That's something to watch. I think the sea level rise is one that's certainly something that we were aware of it here, both as an industry and as a community. And I'm so pleased to see Stone Harbor and Avalon doing what they're doing in terms of monitoring flooding and improving drainage and those kinds of things. Raising the bulkheads, it's a long-term project, and it's going to have a major benefit in terms of reducing the flooding on the island. So those are some of the threats or potential threats that I see to the market.
And I would just add a couple of things. Certainly inflation seems to be on a lot of people's minds. That certainly is something that could derail things here. And I do think we're a little bit predicated to the stock market. I think over the last couple of years, certainly since COVID, the real estate market, not just here, just across the board in the U.S., has gone up quite a bit. But with that, the stock market has done the same. So I think you're seeing a lot of people, Randy spoke to it a little bit about the cash buyer. A lot of people are taking money from their portfolios and put it in real estate. So if the stock market isn't as steady and as strong and sort of falls back, I could see people slowing down purchasing here. And if slowing down purchasing happens, then inventory will eventually build. So that is one thing, along with inflation, that we all sort of keep our eye on as well.
I'll just add to that real quickly, Kerr, sorry. Brian brings up two great points in terms of inflation in the stock market. And I think, for real estate, a little bit of inflation is okay because real estate is seen as a hedge against inflation. But too much inflation is not good because that's going to result in higher interest rates as they try to quash the inflation. With the stock market, along those lines, a similar idea, a little bit of stock market volatility we've seen in the past prompts people to take money out of their stock portfolio and put it into real estate. They want to capture those gains from the stock market, put it into real estate, which is seen as the solid long-haul performer. So a little bit of volatility in the stock market's okay. Too much for a stock market tanking, that's not a good thing.
And to add to that, and Randy had mentioned, so I've been here 16 years. Randy's been here 100 years. So he knows a little bit better than I do. But in the 16 years, I think the one common narrative in this town, on this island, is that if you're an owner and your ownership is long term, there is always a time. Real estate ebbs and flows. It almost, if you look at long-term charts, you could almost push it to an 8 to 10 year gap, high, low, high, low. But here has proven, and they're not making more of it. It's a barrier island. You could say a lot of things, but for the most part, everyone dreams about owning here. So, regardless of a little bit of pullback or a large pullback, I think time has really shown us that if you're in it and you're an owner and you believe it, it will always come back. It didn't look like that in '89, but here we are, and we are, 30% off of last year's highs. So, I think the belief in this town is something better than I've seen just around in the United States. So I do believe in the real estate here long term. So if you're an owner and not an investor, I think there's a lot of safety in that.
Yeah, great point. A long-term owner is very different from a short-term investor, and we're lucky in these island towns. We have a tremendous built-in demand. People want to be here. They love it here. It's their vacation home. It's where they make memories, and good market or bad, they still want to be here. So we're blessed with that.
All right, our last topic, and I don't know how much we can get into it, but it's the elephant in the room. Villa Maria development and Smugglers development. If you can talk a little bit about that and what we do now.
I'll talk a little bit about Smugglers Cove. I've been involved in marketing the property, as many of you know. I can only say what I can say publicly out of respect for the sellers and the buyers. Both properties are now under contract. I can say that the buyers of the properties are local people. They own properties in town. They're very committed to the town. They love the area. I think that the cat is out of the bag. I think everybody probably knows that Smugglers Cove will no longer be operating as a bait and tackle shop or a gas stop. The gas tanks were removed some months back now. Both properties are under contract. The buyers of the properties intend to build residential units there. So that's certainly going to change the look of that area. And as a former Smugglers Cove dock boy, nobody feels worse about that place disappearing than me. It's a tremendous part of my youth growing up as a dock boy there in high school and college, so I hate to see it go. But in the end, even though the borough tried, the property was owned by private individuals who had to make the best decision that they could make for themselves. And I think the new buyers are going to do nice things with it when all is said and done.
So I won't speak to Smugglers Cove because I wasn't around in the 30s when Randy was helping him there. So I will I will talk to Bill and Marie and what we know as of today. Well, you can talk about it. You probably know more than anyone.
I'm listening.
So there is going to be a rebuttal after this, and maybe some corrections. So from what I understand, there are a couple of developers still in the mix. I believe a decision will be made over the next couple of weeks, maybe 3 weeks, as far as choosing a developer. You can nod if I'm wrong or right. They are not local developers, from what I understand. So they're not local developers, from what I understand, because there's got to be infrastructure done as far as roads and other things. From what I understand in the subdivision of the lots, it really depends on the developer, from what I understand. But I think what's been laid out is there will be 3 total 70-foot lots on First Avenue. The lots going down the street. Sorry? Second, sorry. Apologize. And then going down the street will be, I think, 63-foot lots. And I think there is going to be, it doesn't matter who wins the bid, from what I understand, there will be an oceanfront lot that will be sold off, not developed, which will be an oversized, and I don't know the exact square footage, but I think it's somewhere around the 127 range by 110 lot.
The front is wider than the back, so
The front is wider than the back.
it's about 126.
126. Yeah.
By 110 by 116 point.
Okay. So everyone heard that? 126 by 110 by 116 will be an oceanfront lot that will not be developed, so that will be sold off, from what I understand, as a vacant lot. So I think we'll know a lot more in the coming weeks. But as far as I know, one developer probably will develop all of them. The other developer will develop some and sell some ground off.
I think you might be a little bit wrong there.
I'm sure I'm a little bit wrong. I'm looking at you and you are telling me I'm wrong.
I don't have the freedom to say everything because that's not settled yet.
Come up here for a second if you don't mind.
I do mind.
Finally, we got a real estate professional. Just set the record straight.
I'm just a neophyte in all this, but on 112th Street, there are a total of 8 lots going to be, and we have done the planning for them, as the borough people can tell you. There was a lot involved in this, and the street, and all that. But there are a total of the oceanfront lot, which is pretty huge, and the other 7 lots, I believe, are about 63 by 110. And then on the other side, the 111th Street side of 2nd Avenue, I believe the ones facing 2nd Avenue are about 73 by 110. And then there may be 2 others, one facing 111 and one facing 112. None of that is sealed in stone. So 13 lots total. We're planning. Maybe we won't have to sell all of them. I don't know that yet. There's nothing in stone yet. So we're doing what we have to do to survive and to stay in Stone Harbor. I'm just happy that we're able to stay. The development is planned. We've turned in a lot of things, and we had very good advice from the borough and from the people in the zoning office and so forth that have helped us out in all of this. We're trying to do everything right in the beginning, so nothing comes back to bite us in the end. What's that?
When do you hope to break ground on the new retreat center?
ASAP, as soon as it's ready. The demolition is practically complete. We have to level the ground. They've got to do this, the drone study for underneath the ground for piles and stuff like that. That's all still to be determined. There's nothing cast in iron yet, but it's all well planned and well thought out. And we get a lot of good advice from good people. And we're just grateful about what we say. So keep it in your prayers.
I'd like to thank Brian and Randy for talking to us today. It's been very helpful and insightful.